Should you be borrowing money to invest in the stock market or Bitcoin? And could you even be possibly losing money by not doing so? Let's dive into it. What's up guys, it's Kai here. Welcome back to my channel. If you're new here, I make videos on money, finance, and investing. If these type of videos interest you, go ahead and hit the subscribe button down below and the notification bell to stay updated on upcoming videos. Alright guys, in this video I'll be talking about why borrowing money to invest in the stock market or Bitcoin could be an awesome move to help you get ahead. I'll also be covering over why borrowing money could be a very bad idea. And lastly, I'll be going over what I'm personally going to be doing to borrow money to leverage my debt to exponentially increase my returns. All right, if you're ready to get started, please go ahead and smash that like button. It really helps support the channel. And I'd like to start off by saying I am not a financial advisor. This is not financial advice, and this is for entertainment purposes only. Let's hop into it. So off the get-go, borrowing money to invest in the stock market may not seem like a good idea. And in fact, many experts advise against it. Even one of the world's best traders, Warren Buffett, highly advises against it. But what people don't know is back in the early days, Warren Buffett even borrowed up to 25% of his net worth to leverage that debt to invest in the stock market, and that leverage helped him become the billionaire that he is today. But I'm not saying if we go ahead and borrow money to invest in the stock market, we're all going to become billionaires like Warren Buffett. But it is possible to help leverage your debt to help you get ahead. And also, borrowing money to invest in something is not so far-fetched. A lot of people do it. But you may be more familiar with other things, whereas people would go out and buy new cars, which is a terrible investment. A lot of people buy new cars. Once you drive it off the lot, it loses $10,000, and the price drops consecutively year after year by 15 to 25%. In 5 years, your investment is worth half its value. The same could be said for a college education. A lot of people I know take out a loan to go to college, and they are still paying out their student debt. In essence, that's an investment in yourself and your education, with the intent that that education will get you a better paying job, so where the long-term gains will outweigh that initial debt that you incurred from the college education. A lot of people that I know that even have a degree don't even have a job in that area, and their degree does not increase their pay in the job they're currently working in now. Same could be said for the housing market. You're leveraging your money to buy a big asset, but if you don't do your proper research, maybe you buy in a bad neighborhood or you didn't inspect the house good enough, you could potentially lose a lot of money on that investment. And it also works the other way. It all comes down to doing your due diligence and doing your proper research on what you plan on investing in. So I'd say it'd be a good idea to borrow to invest in the stock market as long as you understand what is your risk and what is your reward. And this needs to be analyzed and understood completely. So this is a two-part equation. One being good interest rates. You need good interest rates, which is the amount you have to pay in order to borrow the money. And the second part is you need a good investment. So the good investment has to outweigh what you're risking. So here, let's use an example with $100,000 to keep numbers simple. Say you have an access to a line of credit at a 2% interest rate, and you borrow $100,000. So that means it costs you $2,000 a year to borrow $100,000. Now you could take that $100,000 and invest it in a dividend stock or a dividend aristocrat such as Chevron, ticker symbol CVX. Now Dividend Aristocrat is a stock that has been paying out dividends for over 25 years consistently and increase their dividends consistently over 25 years. I made a video a while back on good dividend stocks to invest in. I'll put a link to it here. But CVX is currently paying a dividend, which means they pay out that percentage no matter whether the stock goes up or down, of 5.6%. So if you put that $100,000 into CVX, the Chevron stock, every year they'll pay you out 5.6%. So they'll pay you out $5,600. So by borrowing it at 2% and investing it in CVX, you'll be at $5,600 a year, and you'll only have to pay $2,000 a year. So in essence, you're making $3,600 a year for doing absolutely nothing. Now this $5,600 is paid out regardless whether the stock goes up or down. If the stock goes up, you get paid even more. So if this is your situation, you're actually losing money by not borrowing that money that's available to you. Now, these dividend aristocrat stocks have a proven performance of over 25 years, so they are relatively safe. Same could be said for the S&P 500. You could take that $100,000, invest it in the S&P 500 index fund, which has an average rate of return over the past 80 years for 10%. So in that same scenario, that $100,000 would get you $10,000 a year, and you'd only have to pay 2% interest. So in essence, you'd be making $8,000 a year just by being more efficient and moving your money around. But by no means are returns guaranteed. But you can go ahead and analyze it, see your history, and determine your own risk to reward ratio and what you're comfortable with. $3,600 a year or $8,000 a year, that may seem relatively low, but low risk, low reward. I'm going to be doing something much cooler with mine, and I'll go over that a little bit later. But if you want some guaranteed returns, you can go ahead and click the link down below and get 4 free stocks from Webull, and they will be valued at a minimum of $21. So by investing $100, you'll be guaranteed 4 stocks of a minimum worth of $21. That's a 21% rate of return, and the $21 is the low end. Your 4 free stocks could be valued up to $3,600. If you're interested, link is in the description down below. Now, there are a bunch of instances where borrowing money to invest in the stock market is bad. So you do not want to borrow money with high interest rates. And you also don't want to risk money that you cannot afford to lose. So say you borrow money that would affect you way more losing it, even if you were to double or triple money on the high side. If you need that money, do not borrow that money. And with high interest rates, it's even harder to find investments to beat those interest rates to make it worth your while to borrow it. So for example, let's use the high credit card interest rates of 25%. And keeping numbers easy again, let's use $100,000. So say you borrow $100,000 at a 25% interest rate, you'd have to find an investment that will make you feel super confident that'll beat that 25%. So you couldn't go ahead and put that in a dividend stock like Chevron or even the S&P 500 making you 10%, because you'd still be losing 15% a year. Now, typically, if you're looking for investments that yield over 25%, they'd be a lot more risky. So even if you take that risk and it doesn't work out, or you have to hold for a bit, you'd have to pay $25,000 a year just to keep that $100,000 loan open. So every year that you're not making money, you could be digging yourself a deeper hole, which is very dangerous financially. So it is of utmost importance to assess your risk, which is your interest rates and what you can afford to play with, and your reward, which is your investments and where those can take you, and is it worth it? So I'm gonna go over on what I plan to do and the 2 places that I'm gonna borrow money from to invest money in the stock market and Bitcoin. I'll break down the numbers I see and why I see this as a good idea. So the first place that I'm gonna borrow from is that I have a line of credit that has an interest rate of 1.75%. So I can take out $20,000 from there and I can invest it in the stock market, because I just have to beat 1.75%. I could invest it in Tesla stock, as Tesla has been very good to me this year, or more so thinking about investing it in a Bitcoin mining company such as Mara. So they're currently trading at about $20, and my last video I went over on how they can go from $100 to $200. I'll put a link to that right here if you want to go check that out. So the numbers that break down that is if I take $20,000 now and drop that in, let's just use Mara since I have a price prediction for that. To make numbers simple, take $20,000, invest $20,000 in Mara. They're currently trading around $20. And if they go up to $100, my $20,000 turns into $100,000. Now, paying back my line of credit, minimum payment is $30 a month, which where I live is only 2 plate lunches. So at $30 a month, I have the potential to make $100,000. Likewise, if I invested in Tesla, Tesla has been skyrocketing this whole past year, and they're still forecasted to go over $1,000. Currently, they're trading around $850. So even that price increase dwarfs that 1.75% interest that I would have to pay on that $20,000 that I borrowed. The second place I'm going to be borrowing from is my 401k. So I know normally people just like to leave alone their 401k. So people's 401k's plan normally is set in a S&P 500 fund, which makes 10% a year, typically. So I'm gonna borrow $20,000 from my 401k, and I'm gonna drop that in Bitcoin. and it doesn't cost any interest at all. But what I'm losing is that $20,000 sitting outside of the market in the index fund. So what I'm losing is a 10% gain every year. But by taking that and allocating that in Bitcoin, sky's the limit again. Now, as Bitcoin is predicted to go well over 6 figures, some people are even predicting $1 million. But what I'm looking at is I can borrow that money now, interest-free, and put it somewhere where it could grow exponentially faster. So looking over the past 5 years, Bitcoin has smashed all of the indices, the S&P 500, the NASDAQ, by multiple times over. While those have grown maybe anywhere from 50 to 100% over the past 5 years, Bitcoin has grown thousands. And it is projected to continue to do so. So I understand Bitcoin is very volatile. It'll take massive swings up and down. It's currently trading at 35,000. It already hit above 40,000. I totally understand that it could drop to 20,000 overnight. And price predictions going from 6 figures all the way to $1 million. But the big picture is, where do I think it'll be in 5 years? If I leave that $20,000 in my 401k, it'll probably grow to $30,000. If I'm following that S&P 500 10% year return, but if I take that out and put that in Bitcoin, that $20,000 could possibly be $100,000, $200,000. And in either case, I'm not losing any money paying anybody interest. In this case, I'm borrowing from myself, my own 401k plan. So I'm not paying any outside person any interest. So I see it as just choosing the better opportunity. So my 401k loan will be for 5 years. It'll cost me $300 a month, but that'll be only paid back to myself, paying back my own 401k plan. And that gives me the potential to take advantage of this $20,000 today, put it in a growth opportunity that I see that has massive potential. So both of these trades, both from my 1.75% credit line and my 401k, have both low interest rates and exponentially high rewards. So it's a very asymmetrical bet where I have very little to lose, a lot to gain. So if you're interested to see my trades on what I'm gonna do with these $20,000, you can go ahead and check out my Instagram here. I post my trades there. All right, guys, if you found that video interesting, please go ahead and hit the like button. I really appreciate it. It helps support the channel. Go ahead and share the video if you think somebody will find it interesting. And in no way am I advocating for everybody to go out and borrow money to invest in something better. Everybody has to assess their own risk to reward ratio and what they're comfortable with. And be sure to do your research and what you feel confident in investing in. If you made it to the end of the video, thanks for watching, and I'll see you in the next video.